Hey everyone, I bet some of you listening are probably working hard to, grow a business and maybe hitting a wall when it comes to funding. Well, we're going to take a deep dive into FreedomPath's catalog of commercial funding products for 2024, just to see what options are out there and, whether they might be a good fit for you.
Sounds interesting.
Yeah. FreedomPath is kind of like a one-stop shop
Yeah.
for, financial tools and services. They work with businesses in the U.S., Puerto Rico, and Canada. And they've got a pretty impressive range of funding options, from as little as a few $1,000s all the way up to $10 million.
Wow, that is impressive. You know what I find interesting? It seems like FreedomPath isn't just about getting you any funding. It's like they have a much more comprehensive approach.
Yeah, that's actually what really caught my eye about them. It's their three-goal mission. So first, they're all about maximizing your access to funding right now.
Makes sense.
Second, they want to guide your business towards becoming bankable, which I definitely want to unpack later.
Yeah.
Because I think a lot of people hear that term and aren't quite sure what it means.
Yeah, I agree. That is a term that gets thrown around a lot.
Exactly. And third, their goal is to help you access larger, lower-rate bank loans in the future.
So it's very strategic.
It is. It's a very strategic, long-term approach,
Yeah,
which I think is really valuable.
I think so too.
Okay. So let's get into the nitty-gritty. What are the absolute must-haves before you even think about applying to FreedomPath?
Well, the foundation is really important. You'll need a business bank account, but they can help you set one up if you don't have one already.
Okay.
Yeah. You also need to be operating in either the U.S., Puerto Rico, or Canada. No open bankruptcies, though they can assist with that too, which is pretty incredible.
Yeah.
And any tax lands have to be in a payment plan. And of course, you'll need a clean history with previous lenders, so no defaults.
Okay. So a solid foundation is key. But then there's the big elephant in the room, credit. For many businesses, that's a major hurdle. So how does FreedomPath approach that?
Yeah. You're absolutely right. Credit can make or break your ability to get funding. FreedomPath has an AI-powered credit restoration tool.
Interesting.
Yeah. It can address things like late payments, charge-offs, collections, even medical debts and repossessions. They don't just throw you to the wolves if your credit score isn't perfect.
That's great. Okay. So let's get to the main event, the funding options. Their catalog is extensive, and it seems like they've tried to cover every possible business need.
It does. It really does seem comprehensive. For example, they offer a business term loan with a maximum amount of $10 million.
Okay.
This product seems to be popular across industries. I see it being used by retail stores, medical businesses, food and beverage, even technology companies. And what I find really interesting is one of the unique benefits they list is the potential for reporting to business credit bureaus.
So it sounds like in addition to, potentially refinancing options, the business term loan could be a good way to build business credit.
It could.
But what if a business needs more flexibility?
Then a business line of credit might be a better fit.
Okay.
This one's popular in construction, medical fields, manufacturing, and e-commerce. The benefit of a line of credit is that you only pay interest on what you use, and each payment frees up more credit. So this seems like a more flexible option compared to the business term loan.
Yeah, makes sense. What about SBA loans? It seems like those are always a popular topic, especially for certain industries.
Right. SBA loans are favored by a lot of businesses, especially those in retail, food and beverage, assisted living, and childcare. I think what makes them so attractive is the long-term nature of these loans. The terms can extend up to 25 years, which is a big deal for a small business.
Yeah.
And the rates are generally very favorable, usually prime plus a small percentage.
Okay. So there are some, pretty significant advantages to SBA loans, but I'm guessing there's a catch.
Well, they do have stricter requirements, but, if you qualify, the benefits can be significant. FreedomPath lists time in business and annual revenue as just two of the minimum qualifications.
Got it.
It would be interesting to see how many businesses actually qualify for an SBA loan versus some of these other options.
Yeah. Good point. There are a few options here that I definitely want to unpack a little further. You mentioned earlier that FreedomPath's approach is more holistic. I'm seeing some evidence of that here with the business credit builder option. It even comes with a $50,000 funding guarantee. That seems like something worth exploring.
Absolutely. It seems designed for businesses that are really laser focused on building their credit profile. Businesses in web-based industries, acquisitions, real estate, or even tech might find this option really valuable. A $50,000 guarantee is an interesting incentive.
It is, but how does that guarantee actually work? I mean, is it really as simple as it sounds?
Yeah. So it's for active FreedomPath members who complete all the steps within their program and use their credit repair tool. So you're not just getting funding thrown at you, you're actively working to improve your creditworthiness.
Right.
And that effort is rewarded.
Makes sense.
I think that's a pretty cool approach.
It is. It actually seems like a pretty smart way to motivate businesses
Mm-hmm.
to take those steps.
Yeah.
Okay. What about syndicated lines of credit? 0% interest for 18 to 24 months. Sounds almost too good to be true. What's the real story there? Who actually qualifies for this?
So the catch is that it's primarily for personal credit-based lending.
Okay.
Your personal credit score needs to be at least 650 with no major derogatory items.
Got it.
So your personal credit history is going to be a big factor here.
Okay. So it's not really a pure business credit option. Who would benefit most from this type of funding?
It seems ideal for startups, e-commerce businesses, even real estate and home-based businesses. The low interest period is a great way to get started. But you need to have a solid plan for when that period ends.
Right. You don't want to be caught off guard when those interest rates go up.
Hmm.
Now, one more I want to touch on before we move on is cannabis financing. This is a hot sector right now. And it looks like FreedomPath has recognized that.
It's fascinating, isn't it? Traditional lenders have been very hesitant to work with cannabis businesses. But FreedomPath seems to be embracing this growing industry.
Yeah, it seems that way. So what are the requirements like for cannabis financing?
Hmm.
Are they more stringent than other options?
Well, they seem to be more focused on cash flow and time in business, rather than credit scores.
Okay.
Which makes sense, given that it's still a relatively new industry, and traditional credit data might be limited.
Right.
That's actually pretty forward-thinking of them, I'd say.
Yeah, definitely. I'm also seeing specific programs for healthcare financing, women, entrepreneurs, and veterans. It's great to see them offering options tailored to specific communities.
It definitely seems like they're trying to be inclusive.
Yep.
And recognize that different groups have unique needs and challenges.
Yeah.
It's not a one-size-fits-all approach.
Right. I'm starting to see that FreedomPath isn't just about handing out loans. They're strategically guiding businesses towards a stronger financial future. Which brings us back to this concept of becoming bankable. What does that really mean? I think a lot of business owners might find this term confusing or even intimidating.
It's a good question, and I think you're right. It's not always clear what it means to be bankable. Essentially, it means meeting the criteria that banks typically look for when assessing businesses for loans. And those criteria are often much more stringent than what you might see with alternative lenders like FreedomPath.
So banks are looking for more than just a good idea, right? They want to see proof.
Yeah.
So you can handle their money responsibly.
Yeah.
But what does that look like in practice?
Well, banks are inherently risk-averse. They want to see evidence of a solid track record, consistent revenue, strong cash flow, good credit history, both business and personal, and a well-managed business overall.
Okay. I'm starting to see how FreedomPath's approach aligns with this concept of becoming bankable. Their products aren't just about getting funding now. They're about putting businesses on a path towards traditional financing options.
Exactly, by helping you improve your credit, manage your cash flow effectively, and demonstrate a history of responsible borrowing. They're putting you in a much stronger position to apply for those bank loans down the line.
So it's not just about getting a quick loan. It's about building a sustainable financial future for your business.
Exactly. FreedomPath seems to be taking a much more holistic approach. It's about empowering businesses to become more attractive to those traditional lenders. They're opening doors to better loan terms and greater financial stability in the future.
Now, this brings us to some even more specialized options like AR lines of credit and inventory lines of credit. But before we jump into that, let's take a closer look at how some of these funding products have helped businesses in the real world. We'll do that right after this.
Welcome back. Before the break, we were talking about FreedomPath's more holistic approach to funding and how it aims to guide businesses towards becoming bankable. But they also offer a variety of specialized funding products that caught my eye, and I'd love to explore those a little further.
Yeah, me too. AR lines of credit and inventory lines of credit. Those are a bit more niche than some of the other products we discussed. What are those all about?
Well, let's start with AR lines of credit. These are designed for businesses that work with invoices. Think manufacturing, staffing agencies, wholesalers, even tech companies.
Yeah.
They often have significant amounts of money tied up in outstanding invoices, which can really impact cash flow.
So an AR line of credit is kind of like a way to unlock that cash.
Exactly. It's
Yeah.
essentially a revolving line of credit. The amount available goes up and down as invoices are paid.
Makes sense.
It can be a lifesaver for businesses
Yeah.
that have to deal with longer payment cycles from clients.
Yeah, that makes a lot of sense. So how does an inventory line of credit differ from that?
Inventory lines of credit are for businesses that need to keep their shelves stocked.
Okay.
So, e-commerce businesses, wholesalers, manufacturers, even healthcare companies, they need to have enough inventory on hand to meet demand. But that can tie up a lot of cash.
Right. So the inventory line of credit helps them purchase inventory
Yeah,
without draining their bank accounts.
precisely. And
Yeah.
like the AR line of credit, it's a revolving line, so the amount available adjusts. As inventory is sold and replenished,
Okay.
it's all about maintaining flexibility and ensuring that operations run smoothly.
Interesting. These both seem like great options for the right businesses. But what about something like sub-debt financing? That one sounds a little more complicated. What's the deal with that?
Sub-debt financing is interesting because it's kind of like a second-tier loan. It sits behind a senior lender's claim on a company's assets. So it's typically used by businesses that need additional capital,
Yeah.
but might not qualify for a traditional bank loan
Yeah.
due to credit history or other factors.
So it's riskier for the lender, which means the interest rates are probably higher. Who's using this type of financing?
We see sub-debt financing being used by companies with strong cash flow, but maybe not the best credit profile. Industries like food and beverage, e-commerce, transportation, and manufacturing come to mind.
Okay.
It can be a valuable option, but it's definitely not for everyone.
Okay, that makes sense. Seems like FreedomPath really has created a toolkit with a potential solution for almost every funding need.
It really does seem that way. And it all goes back to their mission of maximizing access to funding. They're trying to provide options for businesses
Yeah.
that might fall through the cracks with traditional lenders.
Right. And we haven't even touched on some of the more niche options you talked about before the break. Business financing, financing for healthcare,
Yeah.
women empowerment loan, and veterans business loans. What are your thoughts on these specialized programs? Do they actually provide value, or are they just clever marketing?
I think they offer real value. It shows that FreedomPath understands that different industries and demographics face unique challenges when it comes to securing funding.
Yeah. For example, with cannabis financing, it's clear they're responding to the rapidly growing cannabis industry. Traditional banks have been very slow to get on board, so it's great to see a company stepping in to fill that gap.
Yeah. What I find interesting is that they don't seem to have the same restrictions as traditional banks. For example, they offer unsecured loan options to cannabis businesses, which is almost unheard of in the traditional lending world.
Wow.
That's a big deal for an industry that is still navigating a complex regulatory landscape.
It definitely shows a willingness to embrace an industry that many others are still shying away from. And what about the financing for healthcare option?
I think that one is particularly important because it recognizes the unique challenges that healthcare professionals face.
Right.
Starting a practice or expanding services can be incredibly expensive, and traditional lenders often require a lot of collateral or personal guarantees.
So is FreedomPath making it easier for healthcare professionals to access the funding they need?
It seems that way. They seem to be offering more flexible terms
Wow.
and focusing on the individual's qualifications and experience rather than just their credit score or collateral.
Okay.
That can be a game changer for someone just starting out in the healthcare field.
The women empowerment loan and veterans business loans are also pretty impressive. What's your take on those programs?
I think it's great to see a company actively supporting these underrepresented groups.
Yeah.
Women and veterans often face significant barriers when it comes to entrepreneurship, and access to funding is a huge part of that.
So what sets these programs apart from FreedomPath's standard offerings?
They seem to be focused on providing education, mentorship, and networking opportunities. In addition to funding, it's not just about giving them a loan, it's about providing the support and resources they need to succeed in the long run. That's something I think is missing from a lot of traditional lending programs.
It's a much more holistic approach.
Yeah.
Okay, so we've covered a lot of different funding products, from the more general options like business term loans to the very specific programs for certain industries and demographics. It's clear that FreedomPath has tried to create a comprehensive catalog to address a wide range of needs. But is there anything that really stands out to you? Any big takeaways from what we've discussed so far?
I think the biggest takeaway is that FreedomPath is not your typical lender.
Hmm.
They're not just focused on the transaction, they're trying to build long-term relationships with their clients.
Oh,
They're offering education, credit repair services,
hmm.
and even access to mentors and networks.
Wow.
It's a much more supportive and collaborative approach to funding.
And it ties back to their three-goal mission, right?
It does.
They want to help businesses access funding now, become bankable in the future,
Right.
and ultimately secure those larger, lower-rate bank loans down the line.
Exactly. They're trying to empower businesses
Oh.
to take control of their financial futures.
Okay. Now there's one more intriguing funding product I want to make sure we discuss before we wrap up. Syndicated lines of credit. You mentioned earlier that these are particularly interesting because they offer 0% interest for an initial period. But what's the catch? We'll dive into that right after we hear from our sponsors. Okay, so we're back and ready to kind of unravel this whole syndicated line of credit mystery. You mentioned that they offer 0% interest for a while, which sounds, amazing, but I'm guessing it's not quite that straightforward.
Yeah, you're right. There's always more to the story. What's fascinating about syndicated lines of credit is that they kind of blend personal and business credit.
Okay.
That's how they can offer 0% interest for 18 to 24 months. It's a pretty attractive option, especially for startups or businesses that haven't had time to build a strong business credit history.
That's like a stepping stone, letting you access funding on, good terms while building that business credit.
Exactly. It lets you access capital at a low cost and simultaneously build a positive payment history. And the minimum payments are usually pretty low, just 2% to 5% of the amount you've used, which makes it more manageable for businesses that are just getting off the ground.
That makes a lot of sense,
Yeah.
especially for those who wouldn't qualify for a, traditional business loan due to, limited credit history. But how do these syndicated lines actually work?
So it's actually a pretty interesting model. Multiple lenders pool their resources together to provide a larger line of credit than any single lender could offer on their own.
Okay.
This approach helps spread the risk for the lenders, which is why they can offer those 0% interest periods.
So it's kind of win-win situation. The borrower gets access to capital at a great rate, and the lenders get to diversify their portfolio and potentially gain a long-term client.
That's the idea. It's a model that seems to benefit both sides of the equation.
But what happens when that 0% interest period ends? That's where things could get tricky, right?
Yeah, that's the crucial part. It's essential to have a plan for managing the line of credit. Once the interest rates go up, businesses need to be prepared for that shift.
So it's a great tool for the short term, especially for, credit building.
Yeah.
But long-term planning is absolutely critical. What advice would you give to someone considering a syndicated line of credit?
I'd say go in with your eyes wide open,
Yeah.
Understand the terms and conditions thoroughly. Know what the interest rate will be after that initial period ends. And make sure you can handle those payments. And most importantly, have a clear plan for how you're going to use the funds to grow your business and generate the revenue you'll need to cover the costs.
That's great advice. We've explored a lot of ground today with FreedomPath's offerings, from, business term loans and lines of credit to these more specialized options. It's clear they've tried to create a comprehensive catalog to address the diverse needs of businesses across industries and stages of growth.
It's been a really interesting deep dive. FreedomPath's approach is refreshing. They seem to understand the challenges that businesses face. And they've created a toolkit that goes beyond just providing funding.
Yeah.
It's about building relationships, providing support, and empowering businesses to take control of their financial futures.
I think you nailed it. They're not just, throwing money at problems. They're trying to equip businesses with the knowledge and resources they need to succeed. But remember, everyone, this is just a glimpse into what FreedomPath offers. Their website has a wealth of information with detailed breakdowns of each product, FAQs, and even success stories from other businesses.
Absolutely. I encourage everyone to do their homework, compare options, and see if FreedomPath aligns with their business goals and financial situation.
So as you consider your funding options, ask yourself, what kind of funding fits your long-term vision? Do you need immediate capital, or are you focused on building credit for bigger loans down the road? FreedomPath offers pathways for both.
And that's what I find so compelling about their approach. They can help you address your immediate needs while guiding you towards a stronger, more bankable future.
We hope this deep dive has given you a clear understanding of the funding landscape and that you feel empowered to make informed decisions about your business's financial success.
Remember, the right funding can be a catalyst for growth and achieving your entrepreneurial dreams.
So go out there, explore your options, and build the future you envision for your business. Thanks for joining us on The Deep Dive.